investments are appropriate for every individual. Investor Signals provides a broking account service where we work in partnership with you to manage a broking account. We have access to a number of model portfolios across our ASX 2050 100, the US S&P 100, as well as the ASX and US high conviction strategies, which pick up the ideas expressed on the blog and in the recordings, and we can utilize derivatives to enhance portfolio returns. If you'd like to know more about the broking account service, please contact me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. And if you haven't already, you can get a free trial by visiting investorsignals.com. We're only a couple of weeks away from US Q3 earnings coming through. We're looking for 20% pickup in earnings to $36 of average S&P earnings for the quarter. We're mindful that US technology stocks still trade at a stretched PE, although we've had some mild level of correction in these valuations, but we need a combination of lower share prices and stronger earnings to bring some of these valuations into an area that reflects value. The long-term graph on screen here just shows the parabolic move we've had in the Nasdaq over recent months, and that obviously is reflected in those higher PE valuations. A shorter term graph of the Nasdaq is what we're looking at here. We're under sell signals. It's rolled over, and it had been under that 10-day average up until Friday night in the US, and we'll have a closer look at this. We've had a small close above it. The big decision now for portfolio construction is, do we get a small bounce in the market and then a rollover and lower levels? And really that'll be shaped by those third quarter earnings results as they come through in the next 2 weeks. With that, let's go into a graph of the Nasdaq, and then we'll roll through the ASX opportunities in review. So I'll just zoom in and we'll take a closer look at what's happening here in the Nasdaq. It remains our leading indicator. I think this is where growth is coming from, predominantly in equity markets, in particular in the S&P 500. So this is an important indicator. Continue to watch. The valuation's high, as I mentioned. We've had a correction, a little over 10%, and then we've started to have a move off that low and a close above the average on Friday. What seems plausible is you could get another 2 or 3 days of buying, but there is a risk that the valuations still remain unsupported, and a test of I guess the investor commitment's going to be as we see these earnings results come through. Moving into the Australian market, and tonight what I wanted to do is go through the watch list that I have of the opportunities in review, and then move through the ASX 100 fairly quickly. So this is my custom watch list, and I'll just rank them in percentage gain at the top, get them in order of buy signals. So we're going to move through these for stocks under buy, and there might be a couple there that are under sell. First of all, in the list, TPG, I continue to like this. I think from a risk reward standpoint, there's an opportunity there to continue to buy that on the dip. This is the ultra short Nasdaq, so we'll keep an eye on that Nasdaq while it's above that average. We won't hold these short positions in portfolios, but if we see a rally, as I mentioned, over 2 or 3 days and then it roll over and come back under the average, it'll provide a trigger to think about this ultra short, which is an inverse ETF. It goes up in value if the Nasdaq goes down. One of the themes tonight is just to draw your attention to the opportunity in the gold stocks. Gold's corrected down to 1,850 an ounce. You're starting to see buy signals in Newcrest, Northern Star, Gold Road, Saracen. So you can see here in Northern Star that I've put support there at around that $13 level. For the moment, we can start to see the stochastic starting to move higher, and the stocks rallied from around that $13 up to $14 in the past few sessions. This Cure ETF's one that I've been drawing your attention to for a while. I continue to think this has further upside, and we could see this push up to around that $65 range. The iShares Global Healthcare, I flagged this on the blog, supported around that $100 level. Strong day today, but continue to see healthcare as a defensive area to allocate funds to. Gold Road Resources disappointed, I suppose, with slightly lower levels of production due to maintenance issues. But at around this $1.50, I think it looks value to me, and that just ties in with the thinking that gold likely finds support at around that 1850. The SPY is the Spider S&P 500. Now, valuations are stretched in those technology names, and there are some risks around whether we get that 20% earnings growth that the market's looking for. But I just draw your attention to the fact that we've got the buy signal there in the Spider S&P 500, as we do with the XJO, but certainly as far as long exposure, it's above the average, which is a positive sign, and you just want to be running stop losses on a break below that recent support. Macquarie Telecom, not really doing anything there at the moment. That was just a recent algo signal. This Vanguard Global Infrastructure, I continue to like this. It makes sense as part of the global recovery or reopening trade. Some of these infrastructure businesses are going to see a pickup in volume. So I see support there at around $52 and expect that to continue to move higher. Newcrest Mining, support there at around $30, and that just fits in with that broader gold play. Ansell I quite like, supported around that $35 level, trading 37, so owning it and selling covered calls. Pro Medicus pulled back off its session highs today, and we've covered this in detail in the past. It's a high growth business. Growing earnings at least 30%, continuing to win contracts with major US hospitals. Support there at around that 24.50. A break below that would be a concern. BBOS, so if we see that US equity market roll over or the Nasdaq trade back below the average, certainly think about your exposure to BBOS and BBUS again. Sonic up against resistance, but we like the story there, but sell covered calls. Not sure there's too much more upside. I'll come back and visit this on the blog during the week, so maybe keep an eye out for the post around that Spider dividend ETF. Yank is the short Aussie dollar, and we've started to see that get some traction. It's rallied from 11 up to $12. The Aussie dollar's pulled back from around 73 back to 70 cents. Computer shares under a recent algorithm buy signal. I'll continue to review the fundamentals there. It's not a stock that I'm particularly comfortable with, given last year's fall in earnings and the guidance towards lower earnings this year. So we'll continue to review that and look for the catalyst there to support the technical trade there on computer share. Technology One supported around 750, but that's really just on our radar. We're not doing anything there at the moment. Brambles I like, so owning this at around this 1070, maybe it pushes up to 1150 in a strong market. The IOZ, so this is a reference to the ASX 200, so under buy conditions, support there at around 23.50. It's fine while it's above the average. Break back below that, we'd be cautious on the overall market. But for the moment, there's obviously some buying momentum building in global equities, and we'll just have to wait and see whether how long that actually lasts. The banks ETF, if you're looking for broad exposure to a banking basket, the MVB, which is the ETF that gives you exposure to the local banks, and then you've got this one, the BNKS, which is the BetaShare global banks. You're starting with large exposure to the likes of JP Morgan as the overweight position. Taking a much longer term view, I think there's still risks for the bank stocks over the next 6 months, but if we were to take a sort of 1 to 3 year view, I think we'd look back and recognise that these will probably be times that tie in fairly close with low levels or support levels in the banking stocks, and we see better days ahead for them maybe next year and beyond. Longer term exposure, global banks, think about the BNKS ETF. Ramsay Healthcare, like this, it's a defensive area to hide out in the market, but not much in the way of earnings growth, so owning it and selling covered calls. Illumina, not really doing too much there at the moment. Cube Holdings has come onto our radar, so at around this 250 level. I'll talk to that a little bit more as we toggle through the top 100 companies. Wesfarmers I like. I think physical store volumes are probably going to be down, but online sales continues to be an attractive growth area for Wesfarmers, and again I'll talk more about that as we go through them. CSL I like, but up near resistance now at 300, sell covered calls or take profit. APA we like, so that was one that I flagged, bouncing off that $10 support, now trading up towards 11. Bega Cheese, maybe sentiment here is going to get hit a little, as we've seen with A2 Milk, but keep an eye on Bega. Generally the earnings outlook was fairly positive following the full year earnings in June, so buying this on a dip could be an opportunity that you want to make a note of. ASX, I'll cover that as we go through the top 100. GDX, so this reflects the broad basket of gold miners, so we're assuming support here at around this $52 level. Our preference still is to look at Newcrest and Gold Roads over GDX. Orica, I'll cover that as we go through the 100, not doing anything there. Cleanaway, so we've seen this in the media where the couple of issues. The CEO sold, I think, $5.2 million worth of stock, and the CEO's also been accused of harassment and bullying by certain staff and executives, and whilst he's apologised for that, I think the broad, below the surface there's some issues that are enough to unsettle, I think, institutional investors. Whether this turns out to be a buying opportunity in Cleanaway, we'll know over the coming weeks. But I suspect that around this $2 to $2.10 level ends up being a good entry level into Cleanaway. So what you want to do is keep an eye on the stochastic here starting to turn positive, and maybe a break back above that moving average there, but certainly around sort of this $2.10 to $2 level I'd expect it to find support. Coals there, I'll cover that as we go through the top 100. Oceana Gold, not really doing too much there at the moment. B-Bus, again, if we see the Nasdaq below the average, think about B-Bus. A2 Milk, I'll cover that as we go through the top 100 stocks tonight. And there we are, back to TPG. So I just want to cover that list. There's a few ETFs in there and a couple of stocks outside of the top 100 there for you to have a think about. So we'll move into the coverage of the ASX 100. So we go to the watch list, select ASX 100, get the percentage gains to the top, organise them in buys. So again, for people joining for the first time tonight, we'll toggle through these. We'll get to a point where they switch from buy signals to sell signals, and I'll just highlight that. So that's a reference to the primary algorithm signal, whether it's under buy or whether it's under sell. We are starting to see slowly an increasing number of stocks switch back to buy conditions after being at sort of record low levels where we really had only about 20% of the market under buy signals. We're now starting to see push up to around 30+% of the market. TPG I like, as I've discussed. Flight Centre not doing there at the moment. Afterpay, it's under algorithm buy signals, but we'd only take a strong interest in that if we saw it at lower levels. Northern Star, I think this is something that you want to make note of. Support there at around $13. Saracen support there at around $5, but preference is Northern Star and Newcrest. Newcrest support there at around that $30.50. Beach Energy, so it's really the only energy name that's, I think, under algorithm buy signals at the moment. Origin and Woodside look cheap on a historical basis, but Beach Energy is the only one that's currently in the portfolio under algorithm buy signal. Support there maybe around that 130, 140 level. Sydney Airport's recovering, don't see it having too much more upside above sort of 6 to 650. Given the lower dividend payout ratio over the next 12 to 24 months. Ansell support there. This is a stock that should continue to deliver high single-digit earnings growth over the next 12 months, so I expect it to be fairly well supported around that $35 level there. Sonic Healthcare, we like this, should deliver maybe sort of 4 to 5% earnings growth, maybe 3 to 5% earnings growth as a range. Back up at around $33, $34, it does start to look a little bit expensive, and you want to either take profit or sell covered calls over it. ResMed, given the falling revenue growth and the falling profit growth, So both are still growing, but not at the same rate that they were. And the high PE valuation here on ResMed, we remain patient and are looking to see if we can pick that up at around that $22 level. Appen not doing there at the moment. Computershare, as I discussed, it's now shifted to buy signals, and we'll continue to review the earnings outlook there. Brambles, I like this, and you're getting a little over 2.5% dividend yield, and it's fairly defensive even in a volatile market. Fisher & Paykel Healthcare, this now it's been under buy signals since 2019, so it switched from the sell signals up the top of the screen there into the buy signal there at the bottom, and it's continued to make high highs and high lows in the most recent signal there at around $28, now pushing up towards $31. The company's delivering great top line and bottom line growth, support there at around that $28 level. Ramsay Healthcare, defensive, but not too much in the way of earnings growth, so add a covered call to complement the income return. Fortescue, we've seen iron ore pull back from the highs. Fortescue's corrected from $20 down to $15. Watch these short-term momentum indicators for a turn higher, but somewhere between, so around this $15 level, I suspect a pretty good entry level to reconsider Fortescue. Not doing there in the XTO, but in the XJO, which is the 200, as I mentioned, under buy conditions. Illumina support there around 140, but not really a stock we're too active in. QBE Insurance, keep an eye on this. Maybe the catalyst is just simply waiting for the price to trade back above that moving average, and there could be a trade there. Cube Holding, so port volumes were up about 17% in August on the same time last year. Some will point to restocking after low inventories during the COVID period. So we are starting to see, mixed signals in the flow of data that we're seeing, and from slightly slower retail spending, but yet the port volume data is fairly strong. Some of the manufacturing data in China's strong, but yet we're seeing that soften a little bit in America, and I think Europe still remains below trend. So it remains a muddy kind of outlook there. And the third quarter earnings for the S&P 500, I really think are going to be a major catalyst for the way analysts forward price equities from here. But Cube Holdings, consider that around that 250 level. Spark Infrastructure not doing there at the moment, but I'll just point out a number of analysts have upgraded their outlook there for Spark Infrastructure. Wesfarmers, we like this, recognizing that we could have some patchy data come through, especially with obviously Victoria being out of the equation. But their commentary around the online and e-commerce should be seen as a bright spot. So owning Wesfarmers, it's pulled back from 50 down to this 45 level. I've created a fairly wide bandwidth there in a soft market, whether we see it test the lower levels, but for the time being we can see there that we've had the algorithm buy signal at around 43. The stochastics turned positive and the share price has rallied off that level. AusNet Services, not doing there at the moment, it is under buy signals. CSL we like, so this is what sort of flagged the support there originally at 270, again at 280, pushing up around 300. You could think about selling covered calls. APA Group, we like this. We think on a 2 to 3 year outlook they can continue to deliver 5 to 10%, or say 5 to 8% earnings growth, which supports maybe a push up towards that $11 to $12 range. NIB Holding, not doing in the healthcare names. NextDC, we're cautious on this. I've covered that in detail around our concerns with the accounting side. ASX, defensive income, and you can understand market money flowing into ASX in a low interest rate environment, but overall trading volumes are likely to be lower over the next 12 months than what they were in the 2020 financial year. With that in mind, in a soft market, buying ASX on a pullback to around 77, but where it is at the moment, we're likely to see more sideways action. JB Hi-Fi, being patient, waiting for lower levels there. Westpac under buy signals, Orica under buy signals there, supported around $16. Cleanaway now under buy signals, and keep a close eye on that. Watch for the stochastic to turn higher and the price to trade back above the average. REA Group would like to see this test sort of that lower band there around $100 before looking at adding that into portfolios. Coles we like, so own that, sell covered calls. Iluka Resource now under buy signals, so happy to continue to track that at around that $9 level. A2 Milk, so the market was looking for around 30% growth in A2 Milk. The company's come out and said that growth is likely to be either flat or just up slightly on the same time last year, and given the high PE ratio the stock trades at, and it doesn't pay a dividend, we've seen the stock price hit by over 10% today, and we'll continue to sort of watch that. The lower band there at around $14, whether we get down and test that, we'll wait and see. Qantas now we've switched from stocks under buy conditions into stocks under sell conditions. So we're not being there in Qantas. Boral we think's getting expensive up here at the moment. And some of these names have had strong days today, so Challenger's broken out, traded higher, as is Stocklands. Centre Group was up a reasonable amount today. ALS up against resistance around $9.50. BlueScope assuming up against resistance around $13. GPT still. So one of the ways to think about the property trust sector is maybe through the Spider property ETF, where you're getting broad base exposure. GPT is obviously a high quality office trust, Sydney, Melbourne predominantly. Bank of Queensland, cautious on the regionals again rather than picking an individual bank. Maybe think about the MVB, which is the local bank ETF. James Hardie up against resistance there at around $33. Amcor, we like the fundamentals here. We think the earnings risk is relatively low, but the stock's pretty close to full value where it is there at the moment. Evolution not doing it there. Mirvac, so we're seeing some of these property names all start to do a little bit better. Vicinity, again, not really doing too much there. Charter Hall, avoiding that. Downer EDI, our preference remains CIMIC over Downer. Suncorp, not doing too much there at the moment. Nine, not really looking there. Aristocrat, surprised how strong this is, and we can watch the upcoming earnings result with interest there. Magellan, it's under sell conditions there at 65. It's corrected down to 56, but not really a stock that we're too active in. Seek, so we don't mind the longest term opportunity here for Seek, but being patient, it is under sell conditions, and we'll wait to see whether we get a test the lower levels before entering back into Seek. Link, not doing anything there, but just point out on the other side you've got Computershare that's under buy conditions. Dexus, not doing there at the moment, not doing anything in AMP. Worley's maybe under resistance at around 10. Origin could be a bit oversold down here at $4.50, so if you're looking for a counter trend trade, it's almost closed back above the average, but you may see a bounce there in Origin for shorter term traders. Star Entertainment, Star and Crown, struggle to see how investors have any clarity on earnings there at the moment. Car sales up against resistance, a little expensive. We're just jumping back to car sales. So what we're looking for here is a correction in car sales and an algorithm buy signal in the weeks or months ahead, and that'll be a name that we're happy to add back into portfolios on the next buy signal. Tabcorp, not doing there at the moment, resistance at around that 350, 360 level. Ampol, a little like Origin, it could be a bit oversold down here where it is, and there might be a counter trend trade there in Ampol, the old Celtex business. South 32, not doing there at present. Altium up against resistance around 35, 36. Aurora, I've covered Aurora in prior weeks. WiseTech, not doing there at the moment. Woodside Petroleum, so there's 3 or 4 names that I've covered that are actually under primary sell signals, but I'm just highlighting that they could be a little bit oversold, and we're seeing a little bit of counter trend moves. So Origin and Woodside certainly fit that description. Macquarie, we're expecting 20 to 30% fall in earnings in 20 in 2021. And therefore, we're assuming for the moment the resistance is in place at around that 130 level there in Macquarie. AGL, not doing there, but highlight that could be oversold. Goodman Group, we like this name, and in the same way that we looked at the pattern for car sales, what we're expecting to happen here in Goodman Group is a correction in the weeks and months ahead, shift back to algorithm buy signals, and at that point we look to add it into portfolios again. Medibank, not doing there at the moment. Oz Minerals under sell conditions, so just jumping back to Oz Minerals. So this is another stock that sort of fits that. If we see this roll over and an algorithm buy signal, we're happy to take a look at that in the weeks and months ahead. AZJ, dividend support down here, but not much in the way of earnings growth. Incitec, preference Orica over Incitec. Lendlease, short term, the long term opportunities in Lendlease attractive, and the stock offers good value for patient investors, but right at the moment there's little in the way of catalyst to drive earnings growth in this environment. Bendigo, not doing there at the moment, still cautious. Telstra could be getting a little oversold down here at around 280. Cochlear, not doing there at the moment, sort of preference within that healthcare remains of Sonic Healthcare, ResMed, CSL within that healthcare space. Coca-Cola up against a resistance at around 9.50, but good yield support there. Woolworths support there off that sort of $35, $36 level at 37.50. Maybe think about selling the 38.50 calls to drive extra income. Santos, lower high at around $6, so we're avoiding that at the moment. Domino's, we'll watch this for algorithm buy signal in the weeks and months ahead, and I'll update you on the blog when we see that. NAB switched to sell well, I shouldn't say it switched, it's been under sell conditions for a while now. The last sell signal was at around $21. We've had a bounce higher up to $18.50 and another sell signal today, so I've just shuffled the resistance in there at around $18.50, and I'll keep you updated on the blog. CBA, still under sell signals after creating the lower high there at $76. Reliance, not doing there at the moment. Oil Search, not doing there. Soul Patterson, not doing there. BHP, under sell signal, but as we've discussed in prior recordings, we think iron ore prices stay reasonably well supported where they are. So at this stage, we're not too bearish on BHP and Rio. ANZ under sell signals at the moment. Rio under sell signals. Insurance Australia has really sold off hard from the 650 sell signal, and we'll wait until we see sort of more guidance there from the company that we're seeing improvement in earnings. Treasury Wines under sell signal, so not doing there at the moment. Transurban probably back up against full value there at around around $15. We are going to see a cut in dividend over the next 12 months. Crown Resorts looks to be heading lower, tough operating environment, and there we are back to TPG. So just to finish tonight with the XJO, and so the opportunities in the market at the moment are limited to, I think, stocks that are telecoms, TPG, Wesfarmers, as I discussed, maybe sort of Ansell, Sonic Healthcare, CSL, etc. in the healthcare space. Fortescue, just be mindful that we've seen that correct, $4 or $5. The gold stocks are a standout at the moment. Cleanaway's corrected from $2.60 down to $2.10. And then those couple of ETFs, which is really the Vanguard and the Cure ETF. And continue to just keep an eye on the blog as we focus on the opportunities from a sort of timing standpoint with what gets covered on the blog. So when we're looking at the XJO, it's bouncing higher. The Nasdaq's above the average, so we're in a counter sort of after the sell-off. We've got a bounce or a counter trend move higher. It's too early to tell whether this really develops into a sort of structural support level. In order for that to happen, we need earnings Q3 earnings in the US to meet or exceed expectations. We're coming into a volatile time as we face sort of the Q3 earnings and the US election. Whether the market can create new highs in the US in that environment, we'll have to wait and see. But for the moment, what we're doing is looking for sort of safe areas of the market to take equity exposure, and we're continuing to monitor what the timing of adding the hedging side of the strategy back into portfolios again. Thank you for listening in, and look forward to speaking again next week. And as I mentioned, try to keep an eye on the 11 o'clock postings on the blog. If you have any questions, please don't hesitate to call me on 1300 614 002.